Case of Anbang's missing chairman has been grabbing headlines in China and hanging over the outlook for Chinese insurance companies. Anbang's Wu Xiaohui unable to perform his duties. That explanation coming despite reports that he had been detained. The government had declined to comment on the status of Wu, but the vice chairman of China's insurance regulator assured on Tuesday that despite prominent problems, the Chinese insurance sector is still secure. Just yesterday, the CIRC issued a draft of rules aimed at containing credit risks in the insurance space. Sam Rodwan is partner and co-founder of Enhance International and joins us live from Beijing. He consults to China Life, Sunshine, and Taikang in the insurance space. Sam, thank you very, very much for joining Oriel and me. What does this case about the missing Anbang gentleman tell you about what is going on? What do you think is going on?
Well, this is part of an effort to kind of clean house in the insurance industry. Ever since the chairman of the CIRC got detained, everybody saw this coming. And the question is, it's not just Anbang that they're looking at. They're probably looking at other companies. And there is a very concerted effort now to clean up the insurance industry, especially on the life side.
Do you think that this is what is expected, Sam? Do you think this is a case of a missing chairman who may well be detained and, be read his rights only to be released in a few days' time to resume his duties? I mean, could it be something as simple as this? The government is giving him a warning.
That is possible. I mean, I think it's very clear that the government is trying to send a very, very clear message, right? Which is basically specifically for the life insurance business, right? That you're not in the business of wealth management. You're in the business of providing insurance protection. And especially as it relates to health insurance and supporting the pension industry, right? That's where the focus needs to be. They tried to send that message across in 2016 without a whole lot of luck. And as you can see, they were very concerned about the product that was created by Anbang that appeared to be a protection product but was really a wealth management product disguised as an insurance product. So this is probably a way for them to really send a message across loud and clear.
Earlier on in the decade, this was one of the companies that was, I guess, given a little bit more freedom, a little bit more leeway. Is this just, I guess this is relevant because of yesterday's news with some of China Asia has been included in the MSCI, but is this just another warning to international investors out there that companies in China are still under government rule as much as the government is trying and attempting to, I guess, relinquish some of that power?
Yeah, you can make the argument that is the case. I mean, I look at it from a positive perspective, which is this type of house cleaning was well overdue, right? You have a situation where the insurance industry is barely scratching the surface on complementing health insurance or social insurance for that matter, right? And in a way, I view this as a positive step in terms of seeing to it that the insurance industry has its head right.
Sam, let's talk about what Anbang was doing. I mean, they were making waves because of the way they were spending and the high-profile deals that hit the headlines. But in terms of risk tolerance, they had a risk tolerance that was heads and shoulders above everybody else. I mean, look at the kind of risk that they took on. Their leveraged bets. They're sourcing cash from share sales, local private equity firms, things like that. I mean, their very aggressive investment strategies expose them to very, very high risk, which was untenable. I mean, this was a model which was going to crack at some point with or without its chairman being detained, wasn't it?
Yeah, that's a very good point. I mean, if you look at their balance sheet, it looks more like a balance sheet of a hedge fund as opposed to a balance sheet of an insurance company. With an insurance company, you need to be very stable and very conservative in your investments, right? Because you need to be there for the next 30, 40 years to pay off my policy. But I mean, if you just take an example and you look at their assets, you know, they have 20% of their assets of their life insurance business in equities, right? Now compare that to the US where it's around 2% or so, right? So it was a very aggressive investment approach that they took with their balance sheet.
Right. Sam, are we going to hear bad things about Anbang for years to come? I mean, a lot of the deals never went through. I mean, I guess fortunately, I mean, given their risk profile, but you know, they did buy the Waldorf Astoria. Are we going to hear about liquidations, Chapter 7s, and all the you know, all kinds of terrible things in the years to come? I realize this is pure speculation.
Well, you have to keep in mind that of all things, Anbang is very cash rich, right? So they have that going for them, right? But there's kind of a short-term risk that they're facing, and then there's a longer-term risk. In the short term is the fact that the government has shut down 90 or so % of their distribution, right? So business coming in right now has been severely disrupted, right? So bringing in new revenue is kind of the short-term risk. The longer-term risk is the type of wealth management products that they were selling, right? Is such that it provides an incredible amount of cash flow coming in when you sell the business, right? But then when the business is due, so for example, this policy that was, or the product that was shut down, right, had kind of a 2-year payout, right? In 2 years, you can make an argument that he's going to have a cash crunch, or Anbang's going to have a cash crunch in 2 years. So the way to alleviate that cash crunch is either to look at your reserves, which they have fairly sizable reserves, or you look to bring in more business, okay, to kind of complement the cash outflow, right? So those would be the two things I would look out for, right? But for now, though, it doesn't necessarily look that there's an immediate risk, at least from the financial perspective.
Sam, thank you very much for joining Oriel and me. It's been a fascinating chat. Sam Radwan from Enhance International, which consults with major Chinese insurance companies.